Today I'm going to talk about what if you wanted to buy commercial real estate that was occupied by medical marijuana. I know that's a little bit of a interesting subject because that's being legalized, a medical legalization, full legalization, depending on which state that you're in. That is also a real estate play because a lot of times you got these medical marijuana type businesses that open up retail stores. And how do commercial real estate people look at it? I'm going to do a share screen, but really quick is that where you get a little tricky is that because marijuana is still on the Schedule 1 banned substances in the FDA, it's federally illegal, even though it might be legal in the state. And then what happens is that if you have a lender for your property, and if the lender is FDIC insured, which is also federally governed, then if you have a loan on a property that is occupied by a retailer that's selling something that is federally illegal, that's where you run into the issue. So they tend to sell at higher cap rates. Sometimes people are buying them all cash, no financing, and wanted to kind of just give you that insight. All right, so here you go. You got a just listed, new to market Curaleaf, and Curaleaf is medical marijuana. This is in the Tampa market, specifically the Brandon submarket. It looks like the property was renovated in 2021, of just a few years ago, and is a corporate lease. Curaleaf is a chain of medical marijuana dispensaries, and it is a triple net lease, meaning that as the landlord, you can pass through all the expenses to the tenant. It looks like they're pricing it at $2.429 million, which is a 7.5% cap rate on 7,286 square feet. That works out to $333 per square foot, and it's on 1.29 acres. So if I take the $2.429 million and I multiply it by the 7.5% cap rate, I see that they are paying about $182,000 a year for rent, and that is just the base rent, not including the operating expenses. For something like this, the operating expenses are probably an additional, I don't know, $50,000 to $70,000 per year is my guess. But if I were to divide that by the square footage of the property, they are paying $25 per square foot base rent. And I think that the operating expenses are likely another $7, $8 per square foot. And that would be your common area maintenance or real estate tax and your insurance for the building and the general liability. I think 1.29 acres is a pretty good size piece of property. So even if someone wanted to land bank it, not a bad idea here. And 7,286 square feet is a sizable building. It looks like there's 65,000 vehicles per day on Brandon Boulevard, and I totally believe it because this is a major thoroughfare, and Brandon is one of the most desirable markets for retail in all of Florida. And so even if Curaleaf were to vacate, I think that the backfill options are probably there. So, which leads me to think like, hey, you know, $25 a square foot, even though it's on 7,200 square feet, might be pretty replaceable. And let's take a look at some of the lease facts. So it's a triple net lease, absolute corporate, meaning that you're not getting a franchisee or you're not getting, you know, an entity that's Curaleaf of Brandon LLC. And the only thing in Curaleaf of Brandon LLC is this one store. You're getting the parent corporation that might have 50 stores or 100 stores. And this has 5.3 years of remaining term on their base term, which is great because a lot of times when you're getting a loan, it is a 5-year term, so it kind of matches up. Extremely low rent of $25 per square foot. I wouldn't say that's extremely low. I think if it was, you know, 2,000 square feet, that would be low, but at 7,200 square feet, it's a pretty big building, and the number of other users that can take that building get exponentially smaller. So I think it's the right rent. I don't know it's an extremely low rent. Subject rent is 31% below concept rent average. Oh, okay. So what that means is that concept rent average. So which is in line with what I've been saying. So a lot of the medical marijuana places tend to have to overpay for their real estate because a lot of landlords don't want to rent to them because they'll get in trouble with their lender. So what they have to do is they have to find these single buildings like this that maybe the landlord does not have a lender. And then because the landlord knows that once they sign a lease with these guys, they can't put a loan on the property, at least right now. And if they were to sell the property, whoever buys it likely can't put a loan on the property. So that just makes it less marketable. So therefore, they have to pay more rent. And I could see that a lot of other locations for Curaleaf probably have to pay $35 a square foot instead of $25 a square foot to get in there. So that makes sense. 2% annual increases, I think that's a little bit on the low side given the use, meaning that I would have pushed for CPI increases, especially at a $25 rent, which is reasonable even for a non-marijuana use. And it says a 20-year transferable Firestone roof warranty. Firestone is the maker or the manufacturer. Firestone makes tires, but they also make roofs. So this could be, I see a white roof, that could be a TPO roof, which is a thermal plastic. I don't know the scientific name for it, but it's basically a single membrane roof, and you get your warranty from it. They're saying that this tenant is recession proof and e-commerce proof. Probably right. I don't think you are, transacting this kind of product as much online, or maybe there's some restrictions against doing it online. And Curaleaf has 160 locations, so that's great. So the corporate guarantee is inclusive of those 160 retail locations across 17 states. And 71 are located throughout Florida, so they have the most presence probably in Florida. They're saying it's necessity-based, essential retailer. I guess if you think of it as a drug, that would be true. They're reiterating, corporate lease guarantee. It is a public company, so it looks like it's traded as CURA and then Curaleaf on depending on which stock exchange. And then their net revenue for the fourth quarter of 2025 is expected to be $330 million, 4% greater than, I guess, the period before. So they're just saying that because if the rent's, $180,000 a year or $200,000 a year, including the operating expenses, they're just saying they make a lot of money. So for sure, you're going to be able to get the rent. They're not going to run out of money and not be able to pay you the rent, right? That's the reason why they're putting that all in there. Location and drivers, population density, 12,800 within 1 mile. That's really good, actually. That's a strong population density, and 93,000 in 3 miles is an extremely strong population density. If you were to run the demos on your property right now, it's unlikely you'll get this amount of density unless you're in like New York City or something. So that's really good. A lot of rooftops. The average household income, I'm assuming this is average. They don't say whether it's median or average. I think they just picked a higher one. Average is 95,000 within 1 mile, which is strong for Florida, especially Tampa, and 113,000 in 3 miles. I would say that if you go into a blue collar average middle income area in Florida, you're seeing an average household income of about $65,000 to $70,000. So this is considerably more than that. Daytime population increases to 16,000 in 1 mile. So what that means is that the amount of daytime workers, not the residents, not people that live there, but people that come there to work during the day, is 16,000 of them in 1 mile. So meaning that you can sell to those workers that work within 1 mile, 16,000 of them, or you can sell to the people that live within 1 mile, which is 12,800 of them. So that's really good actually as well. It's definitely in the path of progress and development, which I think it's true. And I'll pull up the map in a minute. Exceptional real estate quality, massive traffic counts, and it's on a commuter road, thoroughfare into Tampa. All that's true, and it's surrounded by Walmart, Lowe's, Home Depot, Aldi, Publix, Chick-fil-A, LA Fitness, Starbucks, McDonald's, Culver's, and many more Class A retailers. And I would say those are all Class A retailers and not what you would find in a really crummy area. So they're just kind of hammering home that, look, this is not like a bad area. It's a really good area. Look at all these retailers that decided to open up stores there for sure, right? Then they talk about Tampa Bay as a whole, which I usually, dismiss this because when you're buying commercial real estate, especially shopping centers, you're really buying the 2 to 3 mile, maybe 4 mile neighborhood or community. But they did say that, look, the MSA is 3.4 million residents. And they, brokers always say, look, it's zero sales tax on commercial leases and zero personal income tax. So they always make sure to mention that. And then it's being sold by CBRE. So they're, global brokerage firm. I won't click on the offering memorandum because then I'd have to sign a confidentiality agreement, and I am putting this on YouTube, so not going to do that. But I wanted to show you how they market it. So they show you the location right in the middle, Curaleaf with the little blue square, and then you can see immediately to the west is you have the Walmart and the Publix and the Lowe's and the HH. I think HH Gregg is closed, by the way, but it could be wrong. Famous Tate is an appliance store. So this is definitely a retail node here. And I'm going to go to the map so you can see a little bit better. All right, here you go. Now you're over here in Brandon, Florida, just to kind of zoom out to see where you're at. You have Tampa over here. You have the airport right there. So Brandon is a suburb of Tampa. And a lot of people live out here. It's middle income, upper middle income in some parts. And Brandon Boulevard is really, really busy. I can actually show you the street view here, since you can, as you can see, Brandon Boulevard's a major artery. Look at all these cars here. So definitely no shortage of vehicles per day. Now let's look at the site itself so you can see the red marker on the building. And a couple of things. Number one, I'm looking at it and it doesn't have a lot of frontage, right? So it looks a little bit deeper. Let's measure how deep it is. It's about 115 feet deep. And I said it's 7,200 square feet or so, which means that it's about 62 feet wide. Actually, that's not too bad. But the lot itself is just not that deep, and you don't have a lot of parking here. I guess, actually, no, you have decent parking in the front, and I'm just noticing you have parking on the side, too. So I take that back. Okay, you have decent parking. And then your back of the house, you have deliveries, you have employee parking here. Okay, it's not actually that bad. But if this were to become vacant, it just doesn't feel like your prototypical retail location because you don't have the circulation. Something that a lot of retailers like Walgreens, CVS, even Dollar General, that they like to see is to be able to circulate around the building. It just makes it easier for deliveries and for people that are looking for parking, and they don't have to do a 3-point turn to get out of there. They can just keep going and circulate, right? And sometimes you get the circulation because maybe, you have cross access with the adjacent company. Like if this washed up Brandon had some cross access, maybe you could circulate out of here, but it doesn't. So that's not what you have. Let's take a look at the accessibility of this site. So you don't have full accessibility. So what that means is this is Brandon Boulevard. And if you're going west on Brandon towards Tampa, towards the interstate, you can make a right into the property. And then if you wanted to leave the property, you can make a right out of the property and continue going on Brandon Boulevard. Now, if you're coming home from work, maybe you work in Tampa and you got off the interstate, now you're going east on Brandon Boulevard. How do you get to this property? You'd actually have to pass it and then make a U-turn on Beverly and then come back. That is inconvenient. And then if you wanted to continue going east because you need to go home and your house is east of here, to get out of here, you'd have to make a right out of the property, go west a little bit, go into this turning lane, make a U-turn, and then continue east. So that is a knock on the property, not a complete, horrible thing, but it will knock out a lot of other retailers that really need that convenience. So let's take a look at the immediate area. You have a car wash here. This looks like a 7-Eleven with some gas. This is a Indian grill. And then you have some housing behind it, Chop Chop Tree. So you don't have a whole lot of nationals, Bubba Q's, barbecue, tandoori, Indian, in this immediate area, but you do have an Aldi here. And then if you go to the east, you have your Walmart here. You have your, I think that's a Publix over there. One of these are a Publix. And so this is a retail node. I think this is a great site for what it is. And, look, I think a lot of retailers want to be here, as you can see, of all the national retailers. And if it were to become available, I think you can certainly get some sort of backfill option. And that's what's important about looking at a site like this, is that you're buying it at a 7.5% cap rate, where a lot of single tenant deals, especially in Tampa, are trading in the sixes. Even like a Dollar Tree or a Dollar General will trade in probably the sixes if you're in the Tampa market, and especially Brandon. Brandon happens to be a really good part of the Tampa MSA. So you are getting compensated for it being a Curaleaf, and you probably can't get financing. And the key thing is that the rents are replaceable, because the last thing that you'd want to do is, if the rents were $40 a square foot and you're paying a 6% cap rate, a boatload of money for the property. If the Curaleaf were to leave, then, you wouldn't be able to get that gross rent that would get you the returns that you're looking for. Also, a lot of people are aggregating these medical marijuana facilities as commercial real estate, thinking that they're able to buy these at a little bit higher cap rate, meaning, like I said, if this was completely legal, like it was CVS or something like that, now you're talking like a 6.5 cap, right? Almost a whole percentage point less on the cap rate. Now, if you buy 20 or 30 or 100 of these locations, and you're all buying them at a little bit higher cap rate, and you're just waiting it out, maybe 5 years, maybe 8 years, maybe 12 years. But if it becomes legalized federally, the FDA banned substances Schedule 1, if it becomes legal federally, then all of a sudden that cap rate goes down immediately, because now you can lend on that real estate. Liquidity increases dramatically. So that's a business plan of some investors with the medical commercial real estate. I hope you enjoyed. My name's Hugh Chen. I'm president and CEO of Saglo Companies. We own and operate shopping centers across Florida, 4 in the Tampa market, actually. We are looking to buy more shopping centers in the eastern part of the USA. Please drop a comment below if you're in a commercial real estate business. Say hello. I hope you find this helpful. Catch you later. Subscribe, like, comment, etc. Thank you.